Hello, entrepreneurs. Joe DiChiara, CPA and lifelong entrepreneur, with the sixth version of how to win big at business. And in today's episode, I'm going to talk about the top five, in my opinion, mistakes that self-employed professionals make. Now, these mistakes are very interrelated. So just bear with me as I go through the countdown with you. And at number five, the fifth biggest mistake that self-employed professionals make is they don't hire a business-oriented CPA when they first start. Now, what do I mean by business oriented? Let me be blunt here. Accountants are some of the worst business people that I ever met in my life, which is kind of odd because who do business owners go to when they want advice about their business? They're going to go to their accountant. Well, why would you go to an accountant that really doesn't understand anything about workflows, about marketing, about fundamental business philosophies? Believe me, I've worked for plenty of CPA firms, and a lot of them are inefficient. They don't know how to get clients. They get clients, obviously, if they're CPA firms, but they don't really know how to scale their business. They don't know how to hire people. So how do you find the right business-oriented CPA? Well, you ask them the right questions. Number one, what programs are they using? In other words, what are they using to compile your financial reports? Number two, how do they communicate? Do you have unlimited access to them? If you call, will they pick up the phone? This was another thing that always mystified me. Clients complaining that they couldn't get their accountant on the phone. I mean, you're running a service-based business, and if you don't have time to talk to your clients, you really should be in a different business or working for somebody. But that being what it is, uh, so you want to know what programs are they using? Uh, are they going to have access to the main person? And obviously they're going to say yes. But there's ways to test that. And what you'll do is before you hire them, you're going to call them. Also, you can gauge the attitude of the employees. If the employees are like, like nonchalant, you don't want to go with that firm. Then you want to ask them, how are they presenting your financial info? So, for instance, we encourage our clients to meet with us at least once a quarter to review their financials. Are they providing up-to-date financials, or do they wait until the end of the year, which is what another thing that always mystified me. Accountants a lot of times would wait until February and get a client's 12 months worth of information and do it during the busiest time of the year. That's not a good way to run a business. So by asking these questions and engaging their responses, you'll get a better feel of how they work. Asking for references, in my opinion, is really a waste of time because who are they gonna send you to? They're gonna send you to their best clients, the clients that they know are happy with them. So talking to the staff, making the phone calls, asking the right questions is how you're going to get a good feel. Now, unfortunately, you never really know until you start working with people. Another indication is, are they going to educate you? Are they going to spend time to not only inform you, not only about your taxes, but are they going to dissect your financials? What we do is we like to do comparatives, looking for trends, cycles. Do they have cash flow issues? Do we have solutions for those issues? So these are some of the things that you want to find out, because you really need somebody that's not only going to take care of your taxes, but give you proper guidance, education, and really provide the kind of service that I was taught to give when I got into the accounting business. It's not brain surgery. Now, there's reasons why the accounting profession is where it is and why accountants can actually have accounting practices without knowing how to run a business, without providing world-class customer service. And it has to do with, there's more businesses out there, and in the United States, the businesses are growing. There's more businesses now than there was 5 years ago, and it's just going to continue to go up. And there's less and less accountants, so it's supply and demand. So hopefully you can find the right fit. And usually asking your friends and peers, other business owners, what their experience is. Believe it or not, a lot of business owners don't even like their accountants, which you don't have to like your accountant, you don't have to love him, but you have to be able to trust him and know that they're doing the best that they can do for you. Number four on the list is not learning about the financial side of their business. You must not only know your numbers, but you need to know about the basic financial reports, a balance sheet, a profit and loss statement. You need to know, gross profit percentage. You need to be able to look at your financials side by side and look at it scientifically. And that's what the numbers do. And that's where the accountant comes in. If you're doing your own accounting, bookkeeping, that's a big mistake. One of my mentors, Larry Broughton, always used to say, if you can't afford to hire an accountant, you shouldn't go into business. And that's the truth, because, that's where people go off. That's where they get misguided. Number three is, self-employed professionals don't ask for help. They don't ask for help. They look at asking for help as a weakness. The truth is, great entrepreneurs, successful entrepreneurs, love to help people. And the reason is probably because somebody helped them. My first mentor, my cousin Vinny, I would not be a CPA if it wasn't for him. Chances are very, very good. I put it at like 95%. I was ready to give up on the whole idea of becoming a CPA, because my rationale was, all the accounting firms want somebody with accounting experience. And how was I ever going to get accounting experience if nobody was going to hire me? So seek out a mentor. You don't have to have a business coach. Now, what's the difference? A mentor is somebody that you can go to for advice. They're not going to charge you. A business coach is going to give you a structured, fee-based service. Now, I've had both. I've always had mentors, I've had coaches, I have uh, a combination. I also use my own team. I get feedback from my team, so I'm always asking for help. asking for help is not a sign of weakness. It's actually a sign of strength, which brings me to my second most important thing that self-employed business owners do. They don't know themselves. They don't know their strengths. If you know your strengths, then you know what gaps you have to fill because nobody can do everything. Nobody is great at a lot of uh, at everything. Okay, I'm pretty good at a lot of things. I can do my own website. Not that good. I can do, believe it or not, I can create graphics, especially now with AI. Not that good. Okay, so I took a personality assessment called Strengths Finders. Now you could take this for free. It'll give you your top 5 strengths, and you'd be surprised. You know, we think that we know ourselves, but the truth is we don't. We don't. Larry did an exercise at one of my events, and he asked everybody who's the most negative person in your life. And I'm thinking, and I had to point, oh, I know who it is because every time I talk to this person, the sky is falling. It's Murphy's Law. What's going to go wrong is going to go wrong. Uh, the world's a problem. And the answer was the most negative person in the world is us. We defeat ourselves. We're hardest on ourselves. So when you find your strengths and you're working them, that's going to build your confidence. You know that you're doing something that you're really, really good at. Now you could pay for the big version of the Strengths Finder, which is what I did. I've also read the book several times. I keep going back to it just to refresh my memory, but uh, it's well worth it. Now they're going to give you a detailed analysis of your strengths, 25 different personality strengths. Now, what I did with this, because I have all of my team members do this, and it's funny because I line them all up on a spreadsheet, and you could tell the accountants all had very similar strengths, and the marketing team had also similar strengths. Not They weren't aligned with the accounting team. I wasn't even aligned with the accounting team, which that's why I introduced myself also as a lifelong entrepreneur because I always felt like a fish out of water as an accountant. Today, I'm very happy that I became an accountant because of the experience that I've gained along the way. But if I had to do it over again, I probably wouldn't have picked accounting. But that's what God's plan was for me. So anyway, that's another story. So I didn't fit in with the accountants. I was more futuristic, um, um, looking for opportunities. That's an entrepreneur. One person on my team who was on the accounting team also didn't fit with the accounting department. And she was an okay accountant. She really wasn't that great. What I found out later was my accounting supervisor was having issues with her. But what I found was she was an encourager. She loved coaching people. She liked helping people get from their goal, from their ideas to achieving their goals. She was perfect to help me with my courses. So I put her in charge of the courses, and the percentage of graduates went up dramatically, dramatically. So that's another weakness that self-employed professionals skip out on. They don't know themselves well enough. And last but not least is probably my foundational topic is businesses are not structured properly, legally structured properly. Out of over 33 million, when I started Bedrock, there was 30 million businesses. That was about 5.5 years ago. Today, there's 33 million businesses. Now, that includes people that have side gigs, part-time businesses on the side, but it doesn't matter because once you're in business and you got to file a tax return. And out of that 33 million businesses, over 85% of them are being taxed as sole proprietors. Now, a lot of them become LLCs, not knowing that LLCs, a single member LLC, is taxed as a sole proprietor. There's no special tax form for an LLC. The IRS puts them into what they call default classifications. Now, this was shocking to me because coming from a CPA background, working at CPA firms, if we got somebody that was starting a business, we incorporated them. It didn't matter how small they were just starting out, because it was just a known fact in the CPA world that doing business as a corporation is the best way to do business for a number of reasons, which I don't want to get into here because it'll be a long podcast. But the fact of the matter is, and that's pretty much why I started Bedrock, because when I found out that most businesses are still being taxed as sole proprietors, it just didn't make sense to me. So a good friend of mine that was coaching me on marketing and developing my business, his approach was, if find a big enough problem, if you could solve it, you have a good business idea. And so I'm like, well, is 25 million people being structured the wrong ways, you think that's, and he said, I think you have something there. So that's the top five as of today, my opinion, on the biggest mistakes that business owners makes. And I specialize in self-employed professionals. If you're a manufacturer, if you're in wholesale, retail, it could be a whole different set of circumstances. Probably very close, but there's other factors in play like inventory and equipment, and that's just not my forte. So self-employed professionals, not structured properly, don't ask for help, uh, don't know themselves, they don't hire a CPA, and the fifth one, I think that I might have skipped one, but another one, and it goes in line with not being structured properly and not hiring the right CPA and not knowing their numbers and the financial reports. The fifth one is not taking advantage of all the tax write-offs. So today, as a business owner, once you decide to own a business and try to make money, and I covered this in one of my podcasts, when does the business actually start? All you have to do is want to make money, have an idea to make money, and take action. Once you do that, things that have been personal in nature, like your computer, your cell phone, your car, your office in the home, those become business write-offs corresponding to the business use percentage. So it's not like you can write off your whole car unless you're in a full-time business and you're using your car. Same thing with your cell phone and your office in the home. So tax write-offs, structure, not knowing your numbers, not hiring a good CPA, and not knowing your strengths, not knowing yourself. That's my story. I'm sticking with it. God bless, and I will see you in episode 7. Thank you.